Hey everyone, welcome back to Corporate Decoder, the place where we strip away the corporate jargon and get to the heart of what these filings really mean. Today we're diving into ConnectM Technology Solutions, Inc., and let's just say they've got a plan to get back on the big stage. So ConnectM Technology Solutions Incorporated is putting out a report, and it is all about their latest moves to try and get back onto a major stock exchange. Think of it like a company trying to get back into a big sports league after being a bit on the sidelines. They've made some big announcements, and a key part of their plan involves something called a reverse stock split. Now, what does that mean? Essentially, they're going to take a bunch of their existing shares and combine them into a smaller number of new shares. This is often done to boost the stock price, per S-share, which can be a requirement for staying listed on exchanges like the Nasdaq or New York Stock Exchange. The big news here is that on the 22nd of December 2025, ConnectM announced this plan. They're trying to fix something that is preventing them from being on one of those big exchanges. You know, companies need to meet certain standards to be listed, and sometimes that includes having a share price above a certain level. If your stock price drops too low, you can get kicked off. And that's what ConnectM seems to be trying to avoid or correct. Now, for a little bit about the company itself. ConnectM is an emerging growth company. This means they're relatively new and get some reporting breaks, so they do not have to follow all the same strict rules as older, bigger companies. They are also choosing not to use the extended time period for new or updated accounting rules. This can signal that they are confident in their financial systems, or perhaps that they want to appear more mature and established to investors. The main announcement, as we just touched on, is about this proposed reverse stock split. Why do this? Well, imagine you have 100 shares of a company trading at just $1 each. That's $100 total value. If they do a 1 for -10 reverse split, you'd then have 10 shares. But they would be worth $10 each, still totaling $100. But to an exchange, that $10 per share price looks a lot better and might meet the minimum requirements to stay listed. It is a financial maneuver designed to make the company look more solid and stable from a stock price perspective. This whole announcement is coming out in a press release, which is basically a formal statement to the public and the financial world. It is being filed as Exhibit 99.1, and all the information in it is being furnished, which is an important legal distinction. It means they are providing the information, but they are not officially filing it in a way that makes them liable under certain sections of securities law, like Section 18 of the Securities Exchange Act. Think of it as them saying, here is what we're up to, but don't hold us to this in the same way as other official filings. This is common practice for announcements that are more for public relations and keeping investors informed, rather than reporting core financial results. Looking at some of the background details, ConnectM Technology Solutions, Inc., incorporated in Delaware, has a commission file number of 001-41389. This is like their official ID with the Securities and Exchange Commission. Or SEC, this number helps regulators track and categorize the company's filings. They also have an IRS employer identification number of 87 to 2,898,342, which is their tax identification number in the United States. These are standard pieces of information that identify the company for official purposes. So, who is running the show and making these decisions? The report is signed by Bhaskar Panigrahi, who is the Chief Executive Officer of ConnectM Technology Solutions, Incorporated. As CEO, he is the top executive responsible for the company's overall operations and strategy, including decisions like pursuing a reverse stock split to manage their stock listing. The signature RCI simply indicates that this is an electronic signature. Now, while this filing is very focused on the why and how of the reverse stock split, it does not contain deep financial tables showing revenue, profit, or loss for the period. This is more of an announcement about a strategic move than a detailed financial performance update. Normally in a filing like this, we dig into things like revenue growth, profitability, or debt levels. For instance, a substantial drop in revenue, say a 20% decrease, can mean they are losing 1 in 5 customers or that their products are becoming less popular. Similarly, if their profit margins are shrinking, it suggests their costs are rising faster than their sales. However, in this specific document, the focus is purely on the corporate action and its implications for their stock market status. This suggests that the company's primary concern at this moment is maintaining its listing, which is critical for investor confidence and future fundraising. So, what is my take on this? ConnectM Technology Solutions Incorporated appears to be in a challenging spot, where their stock price has fallen to a level that threatens their exchange listing. The reverse stock split is a tool to address this immediate problem, giving them breathing room to focus on improving their actual business performance. The big risk here is that a reverse stock split doesn't magically fix underlying business issues. If the company isn't growing its revenues, improving its products, or managing its costs effectively, the stock price could continue to fall even after the split, leading to further problems down the line. The opportunity, however, is that by securing their listing, they can regain investor trust and potentially access capital more easily, which they can then use to implement their growth strategies. They are essentially buying time and stability to prove their business model. It will be crucial to watch what happens in their next filings to see if the company can show signs of genuine operational improvement rather than just financial engineering. In conclusion, ConnectM Solutions Incorporated is taking a decisive step to maintain its position on a national stock exchange. While this reverse stock split is a necessary maneuver in the short term, the company's long-term success will depend on its ability to deliver on its core business and achieve sustainable growth. Alright, that is our breakdown of ConnectM Solutions Incorporated's announcement. What is your take on this strategy and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.